Andy, the mic is yours.
Oh, it's mine. Oh, I get to go first. Sweet. You know, I'm 6 out of 7 kids, so when the plate comes around, you grab what's there, right? Otherwise, you go hungry. What I'm going to do here, let me go through kind of what I'm going to do, a little overview. I'm going to run through what's happening in the world. I connect the dots for my clients of global politics and money. So that's what we're going to do a little bit today as fast as we can. I'm going to cover the United States. I'm going to cover Europe. I'm going to cover China and Japan all in 15 minutes. And I want to start off by saying I made a really bold call in 2012 that at the end of 2012 was something that was going to happen. And it's really carried forward even into today, into 2013. Here was my call. The world is not going to come to an end. Right? Mayans were wrong. Forgot about the Mayan calendar, right? Think about this, though. And it really plays into what's happening now. The world, we weren't sure was not going to come to an end back in the summer of 2012. There were a lot of bad things that were going on, mainly in Europe, but also here in the United States and with Japan and, of course, a little bit with China. So while I joke about this, it's really true. Things have stabilized. And when the world is not coming to an end and the world seems like a better place, it's a lot easier to invest, isn't it? Not easy, but easier, right? And that's what I think the central message that I want to start off with today is, this is not 2008. Do not look in your rearview mirror and think 2008 is catching up to you, because it's not. It's getting further away from you. And I think that's part of the problem with the overall view and kind of the feeling that the country has here in the United States is that we keep thinking we're going to have another disaster, and it's not going to happen, at least not for a while. So I will start off by saying that. So let's talk about what's going on in the United States, okay? Fantastic things are happening here. 2.8% GDP growth for the third quarter. Unemployment rate is coming down. Granted, there's a lot of caveats with that. But the latest numbers that just came out last week, 204,000 jobs added to the economy. That's great news. And clearly, what I'm excited about being here is talking to people like you, entrepreneurs. I'm looking forward to having a lively discussion later. But it's really important for guys like you to be successful because it really helps the economy. One of the misplaced focus of Washington, D.C., and I spend quite a bit of time there talking to people, is the thinking that government creates jobs. It doesn't. It's guys like you that are in this room, men and women who are entrepreneurs. As a matter of fact, if you go back really quickly and take a look at this study, Kauffman Institute, the Entrepreneurial Institute out in Kansas City, did a study between 1975 and 2005, and they found that firms 1 year and younger created, wait for it, 100% of the new jobs in this country. Now, what does that mean? If you want to help create economic growth, if you want to create new jobs, help those guys. Help the people in this room. So that's a little thank you from me. But in the United States, things have stabilized. So if we're talking about economic growth, we're talking about this year, remember that this year, even at 2.8% GDP growth, right, we have a fiscal drag in this country of about 2.5%. That's going to be gone next year, most of it, okay? So good things are happening here. And I'll just tick off really quickly. The energy sector is fantastic. Housing is stabilized. Awesome. Manufacturing is doing pretty well. And as far as the wages go, yes, they've been pretty stagnant, but they're starting to improve a little bit. So as far as the United States goes, I like what's happening in this country. I like it more than what's happening in the rest of the world. And the place that I really don't like things per se, and I'm an optimist, is Europe. Obviously, Europe's had a lot of issues. One of the things that you'll notice is that when you look at predictions of what's going to happen for 2014, you're only seeing like 1% growth expected for Europe. Okay? That's decent compared to this year, which is minus 0.5%. Now, they've got a lot of problems with debt and a lot of problems in their financial system, which they're going to address. And it's going to be a drag on their growth, just as it was for us back in 2008 and 2009. To some extent, we're past it. Europe is not. They still have a lot of work to do there. So while there are some good things that are going on there, and it's mainly kind of central around their central bank, and I'll get to central banks in a minute, but really, they're just not going to implode, right? But they're just not going to grow really fast. So don't look for Europe to really come back strongly anytime soon. And of course, indicative of this was the fact that France just got downgraded by the S&P from AA to single A, I think it was. I may have the A's and B's wrong on that. But the bottom line is that their fiscal policy is pretty much a mess in France. And when you tax people at 75%, guess what happens? They become Russian. Yeah. Film stars. Anyway, so Europe's kind of a mess, right? So that's going to stay that way, but it's not going to devolve down into anarchy. Well, not right away, anyway. So let me shift gears a little bit, and let's talk about what's going on in China. And this is where I think things are really interesting. This week, I really want you to keep an eye on what's happening in China because it could be a game changer, and I don't use that term loosely. China has this plenum where they talk about economic reform, and they actually announce what they're going to do. It's exciting from the standpoint, I've heard some rumors, I've seen some things in the press coming out from there. They're going to reform their economy. Here's the really cool thing. They may take important steps towards developing private property laws. Now, this is critical because if you think about China and how big it is in land, if you unlock the wealth of China, you've really done something exceptional. And by unlock, I mean if you allow private property, if you allow people to own their land, great things happen from that. Our country is a wonderful example of that. It's not just owning the land and then being able to develop it either as an entrepreneur or just farming it, but it's also being able to say, hey, this land's worth something, and I can get a loan against it. That's pretty cool, because that leads to other things, good things happening for the Chinese people, believe it or not. Watch this. This is really important for China's economic growth potential going forward. Let me shift gears again, but up to a nation that's a little further up the road in the sea is Japan. Obviously, Japan has been one of the bigger success stories of 2013. And all these things kind of matter for everybody in this audience because we're talking about demand for products, right? We're talking about the overall global health for the economy. And it's the first time since 2010 that Europe, the United States, and Japan all have positive GDP. That's a really good thing. Now, Abe, who's the head of Japan, came in last November, and he had this policy where he wanted to devalue their currency, but he really wanted to get inflation going and wanted to get the economy going. And he had a three-arrow program. One was to spend a lot more money, which they've done. Now, that's kind of dangerous because, as you probably have heard, they have a debt to GDP of 260% in Japan. That's pretty dangerous stuff. Now, number two, they got the Bank of Japan to intervene aggressively in their financial markets. That's a good thing. But finally, on the economic reform side, that's where the rubber meets the road for Japan. They really need to do a lot more things. A couple of examples. They have rice tariffs in that country of 780%. It would be great for the Japanese consumer to spend his money on something besides really expensive rice. That would be great. So if we look at all these countries together, right, we know that the United States has been helped by their central bank. We know that Europe has been helped by their central bank. And we know that Japan has been helped by their central bank. The question is, are these policies with their central banks that have spurred growth, that have gotten us through some really rough times, can they continue going on into 2014? And I will say for the United States, clearly the Federal Reserve that's the big thing. That's what they're talking about. That's what's in the financial markets. Dramatic movements every time the Fed talks about reducing the amount of stimulus that they've put into the economy. This is the tapering question, right? And this is what you're going to hear a lot next week because Janet Yellen is going to go to Congress, and she's going to be in front of people who are trying to get her through the nomination process, and she's going to have to answer a lot of tough questions. And what I always say to people who are going through that process, as far as the markets go, rookies make rookie mistakes. I've done enough of those myself, but I will tell you, she will disrupt the market somehow next week. And so circle Thursday. She's going to be up on Capitol Hill. It'll be a little bit ugly at times. She's going to make some kind of missteps. Now, with the Federal Reserve, you probably know that they're buying a lot of securities every month, about $85 billion a month, to try to keep interest rates lower than what they should be. Now, the problem with the Federal Reserve, just to kind of take this out a little bit, is that the policy has worked less and less. While they've created this gap, really, between the financial markets, the stock market in particular, and the real economy, where we are just not seeing that great return of what they used to do with the first quantitative easing, the second one, and the third one. And most of the Fed members know this. Now, here's the problem, not to get too kind of in the weeds here, but the Fed, our central bank, has zero experience with building up their balance sheet to $4 trillion and taking it back down. They're going to make mistakes. And to some extent, you guys probably noticed what happened in May, right? When Ben Bernanke said, I feel the economy's doing pretty good here in the United States. We should think about tapering, and maybe that'll occur in September. Well, yes, that's okay to say, but in reality, what happened? Interest rates went up 150 basis points in a really short period of time. And that's the danger with what goes on with these central banks. Can they control this? Now, the cat's out of the bag, right? Growth has been going pretty good. The Fed knows they have to stop doing what they're doing. And this is going to be the debate going forward. Should they continue? Should they not? How does the stock market react to this? And Walter will get to this in a little bit. He thinks a little differently than I do. But I'm optimistic about what can happen in 2014. I see global growth continuing on the path that we're on. I see central banks continuing to do the crazy things that they're doing as the economies stabilize and start to grow. But here's my disclaimer. How could I be wrong in this? Because I always like to say that. Partly because I am wrong at times. My wife reminds me of this frequently. But really, it would be a disservice if I didn't tell you what the risks are. Here are the risks. That globally, deflation really kicks in. That we don't get enough economic growth. And that Europe drags in the United States and Japan into a very low global growth, but also low price environment. And that gets pretty tough. Look at Japan. They've gone through now, I guess, 20 years of this deflationary environment. It's been extraordinarily detrimental on their economy. When you have a lot of debt and you have low growth and low wages, that deflation really makes that debt very expensive to pay back, doesn't it? And that's problematic. That's a risk. With China, the big risk would be less than 7% growth, right? And finally, as far as the United States goes, and again, wrapping these risks out there, that there's some miscue on tapering from the Federal Reserve. Now, the way I like to put this is, individually, these things are not bad. But I just want you to close your eyes for a minute and think, if I wrap these all together, what would that be like? And it would be like Sharknado. Think about that. Wait a minute. Raise your hand. Who has seen Sharknado? Has anybody seen? It's one of my favorite movies of all time. It is possibly the worst movie of all time. Think about it. You've got a tornado, sharks, and some people from 90210 in it. How is that? It makes for a really bad movie. And the same thing for the economy. If you had those three things all hit at the same time, that's really bad. So that's what we worry about. Us economists, strategists, guys that look at the markets, we're concerned about something all occurring at the same time. I will yield the floor to Walter in my 2 minutes left over, but I will leave politics till the end. We can talk about things like the midterm elections, outlook for 2016, the recent elections with Christie. Those are all fair questions. I just wanted to focus on the economy. Thanks very much.